Hello, everybody, and welcome to Chart Request Live. Today is Monday, May 19th, and I am joined by my esteemed colleague and co-host, Mr. Jason Purse. How are you doing?
Good, Sam. Excited to be here. I did
Yeah,
a couple chart request lives recently. They're always fun. Always get some good ideas from everybody. So, if you guys can hear us in the chat well, we've been having some trouble with our mic today. Can you guys just write an H for that you can hear us well? We're just trying to make sure everybody can hear us today.
I
And
see
then we'll
the
go from
chat is
there.
alive and well today. I'd love to see it.
Yeah, yeah. So make sure we can everybody can hear and we can get this started. We have so much to talk to you guys about today.
Totally. Jason, front and center for me has been the 30-year yield, pushing 5%. We saw, I think it was Friday after the close, one of these credit rating agencies came out and downgraded the United States debt. And you saw yields immediately spike up, the dollar collapsed. And here you are seeing some follow through today, but they've really just been fading it intraday all day long. What do you think, Jason? Should we take these credit ratings agencies seriously, or are they just a joke like they have been for the last 15 years?
Eh. So, I mean, once again, if you go all the way back, there was basically from the start of my career till now, it's always been the debt's going to bring down the United States, and you can't invest in the United States because we have so much debt and so on, and that's just been, the kind of the laughing joke. But the problem with it is at some point the bill comes due. And it's getting pretty significant where now we're spending more on our debt payments than the Department of Defense, Medicaid, or any of these things. So at the moment, it's kind of getting up there. So I'm not in the boat where I go, okay, I don't want to invest in the United States because of it, but I am thinking that debt and that amount of debt is inflationary. And so we will probably see some problems due to inflation because of it. But that's the only thing I take from it. Now, once again, signals are signals. We're going to still trade. We're still going to make money. I'm just saying at some point it's inflationary, which part of the reason we're seeing yields still rise and will probably rise for a lot longer because the only way to get rid of that much debt is inflation. I'll get off my soapbox about inflation. I could talk about that all day.
I know you can. That's funny. Any charts you want to go over to start the show, or should we just get right into the mailbag?
Let's get in the mailbag, but also we could stop here for 5 seconds based on the debt. So zoom back out again, Sam. So looking at this one, man, this is an interesting chart. So everybody right now is kind of in the boat of going yields are probably going to go lower. The Fed is going to cut rates more. I think that yields are probably going to go higher. I think it's a big possibility that yields could go higher. We're kind of seeing this. Yeah, we got this great. If you were looking at any stock, you would say this is a continuation pattern. This thing's going to go higher because you're looking at yields. Everybody's going, this is not a continuation pattern. It's got to go lower. Look at this top. It's about to fail.
Their bias oozes out of them, Jason.
Yes, and it's because yields have gone down for 40 years. So if you've been trading in the last 40 years, yields went down until March 2020. And now they're going up ever since March 2020 basically, and now we continue to make lower lows in bond prices and higher highs in yields. We haven't made a new high in yields yet, but it looks like it's coming. So
And this is what
I'll be ready
long-term
for it.
trends are made out of, Jason. Yields can't just go straight up like they did back in 2020, and after that as well. As you can see, this chart went from zero or 1%, let's call it, to about 5% in a matter of, what was that, 4 years? A little less than 4 years. It was pretty much a straight line higher. So this recent consolidation has been very constructive for that long-term uptrend. You love to see it.
Yeah, I just think it's all just kind of saying, hey, how do you look at trading? And I think you and I talked about this before. When you look at markets, what do markets do? Well, they surprise people. What would surprise the most people? Yields going lower or higher? And then also add in the fact that the trend is up. So that's all I got.
Ever since the Federal Reserve started cutting rates, Rates have done the exact opposite, and people are confused, and that is where we come in and make money.
Yep, exactly. So we're going to be here to make money because as people are confused, we're going to look at the price action and see what the actual market participants are doing over what we're thinking about the markets. I think this is probably going to go higher. So great chart, Sam. Let's hop into the deck. If you guys have any more tickers for us, let us know. We got some from the mailbag already. So starting off, you want to start with Root?
Yeah, I do want to start with the root, Jason. I'm glad you said that
Do that.
because this chart, let me log my chart. Forgive me for that. So Root, this is a $2 billion property and casualty insurance company. It's been one of the hottest stocks recently. Let's measure it out here. So from this March 2023 low, when we had that banking crisis, this one has rallied over 5,000%. It's been an absolute animal, and it has 17.5% short interest and a 2x days to cover ratio. Now, right here, it's not super actionable. I would be more interested in buying this one on a retest of that 90 level or on strength above this March pivot high, which comes in right around 135. No, that can't be right. Let's see, 180, 175. Yeah, 175 really is the line to buy this one on strength, and that's what I like it a lot more. So if you get above that 175, this one's looking at the 300s, maybe stopping here at 250 first. I don't know. Sky's really the limit though, Jason. As I mentioned, this one has rallied 5,000% off the lows. So the momentum behind this one is tremendous. And it's just now climbing out of a massive base. So I think you want to continue buying dips in this one and looking for opportunities to get long.
So question that a futures trader will ask: what is Root?
Well, it's not a futures contract.
It is not a futures contract. I'm sure of that. So what stock is it? What is it? What sector is it in?
This is a $2 billion property and casualty insurance stock.
Okay.
Yeah, so it's small cap, but we can look at it relative to the small caps. And here it is, also making new highs here.
That's a lot of strength.
Yeah, this one's been a beast, Jason.
And insurance has
1,000% in just a few years. I mean, how many stocks can say that?
Yeah, insurance has done well. If you're just looking at the whole sector, so just generally, like you see a chart that looks like this, you like the stock, you like the relative strength. It's a buy. Just wait for your signals, like Sam's talking about.
Totally. And here's the insurance ETF, KIE. And we can fib this one out. I bet we'll have an extension up here. Not super actionable. We're just kind of in the middle of this long-term Fibonacci extension range. But no, this one's shaping up really nicely. Insurance stocks have been some of the best this entire bull market. You know, financials have been really good. And if you dig inside of financials, insurance have been really amazing. And brokers and dealers have been great. Look at Interactive Brokers. Look at Robinhood. They've been on fire. So yeah, I like this space a lot.
I definitely do too. KIE is one that we had in the portfolio. I think it went out of it last year at some point. We got stopped out, but man, this thing it's really running. It's one of those where it's like I can put money here and it's probably going to be pretty smooth, and I don't have to worry about it too much. The actual trailing stops move around based on volatility of a product. The actual trailing stop for me on this thing was 11%, which is probably the tightest trailing stop I use on anything besides a bond. So, yeah. I mean, it's really, really smooth trending, really good sector. If we start to get a breakout here too, I think this is a buy. It's a good thing you brought this up. This is another buy soon, probably.
Totally, yeah. It's almost making new highs. I think you can jump the entry with like a break of this downward sloping trend line. Mm-hmm. So that would come in right around that 60 level, which you're almost at right now. So yeah, this one's shaping up really nicely. And if insurance gets going, I'm betting that Root is also going to participate to the upside.
Yeah, thanks, Jonathan, for that one. Great one.
Yeah.
EQT, Matt.
Yeah. All right. We're
Looking
starting
at
off with
some
some good
weekly and
takers here.
monthly charts. So he wants weekly and monthly.
Oh, that's exactly what I was going to give him too.
I
So I'm
love
glad
it.
you said that.
Yeah.
So this is a $33.5 billion oil and gas exploration and production stock. And boy, has this one been an absolute animal. So we'll zoom out on the monthly chart. And so from its all-time low in 1974 to its peak in 2014, it rallied about 22,000%. Not bad, right?
Not bad.
We can also fib out that original base that it broke out of, see if that gives us any extensions, and that's not all that helpful. Maybe a little bit too aggressive with the Fibonacci's. So let's zoom in to this more recent base. And Jason, I've charted this one several times, and I've kind of just come to the conclusion that it's better. You can look at it like this and look to buy this breakout above this like 61 and a half, which is that 2014 blow off peak. But really, I like buying this one just on strength above this shelf of former highs from 2022. This one was really a blow off top in 2014. I don't think there's a lot of bag holders there. I think you can use that as confirmation of the bulls taking over the long-term trend, but for more tactical purposes, I like getting long this one above that 50 level, which we are currently above. And from there, I think it makes sense to fib it out like this. So we're looking at 67 and 91 as the next targets. But this one, like I said, has been an absolute animal. How many oil and gas stocks can you name that are making new 52-week highs? And this one's
Not many.
making new multi-decade highs. So,
And you've been talking about this one for a while. This is one that's been on your list. We keep kind of going back and forth about it. It's just where their strength is where you want to be. So many people keep talking about ExxonMobil and all these things.
Chevron.
Yeah, Chevron.
Get out of here with that.
Chevron looks terrible. And so like they want to buy these things and it's like, no, here's the trade. Buy the strongest in the sector. That's how you win.
Yeah, and look at this relative trend too, Jason. Talk about relative strength. In the absolute chart, we were just talking about this 2014 peak being potential resistance, but in relative terms, this one's already breaking out above that shelf of former highs, breaking out to new all-time highs relative to the energy sector. So this one is a leader. It's super actionable right here, right now. I love this. What else do we have, Jason?
I'm sorry, I'm getting stuck on the chart.
Yeah, it's a pretty chart, isn't it?
It is a really good chart. Man, yeah. There's not many in the
they have it going on.
RBRK, 3 month.
Yeah. All right. Do you know this one, Jason?
No.
This one's kind of freaky. So this is, I believe, Indian software. It says it's from Palo Alto, California, but I'm not sure about that. I think it's Indian. But anyways, this is like some type of cybersecurity play. It's not really like your traditional like Cloudflare and CrowdStrike. They're getting a little bit freaky with it. And you can tell the market clearly likes what they're doing here. I already have this one fibbed out from its original IPO base. IPO'd back in April of 2024. Broke out after several months of consolidating sideways. And from that breakout level, it rallied pretty much double in just a few months. So this one is a beast. So you have one consolidation into another consolidation, and now you're breaking out to new highs. Let me get this extension off of here, make it a little bit cleaner for you guys. Yeah, so really this 78 level is the line in the sand for the RBRK. From there, I think you're looking at a $100 roll in the rubric. So 108 is that next extension level. And again, this is a $16.5 billion tech stock. What do you think?
I mean, the chart's perfect. Like
Yeah.
that's a great setup. If you are interested in it, it's great. Mr. Zerby mentioned It's a security AI that has cloud backup capabilities.
Yeah, I told you they were getting freaky with it, and
Yeah, that
they
is that
are.
is pretty freaky, but it looks good. If you're interested
Yeah.
and you like that stock, man, that's a beautiful stock in an uptrend, relative strength. It's
Yeah,
got
this is the
everything you
relative
want to buy.
trend versus hack, which is the cybersecurity industry group ETF. So
Yes.
yeah, it looks just like the absolute trend. So this one has a ton of alpha. Um, I like it a lot. Yeah, can't argue with new all-time highs.
Mhm. That's it from the mailbag, but we definitely have a lot of requests. LB keeps coming up.
Yeah, Jason, let's just start with that one because we were just talking about energy stocks with the EQT. And boy, this one really has a special place in my heart. The Land Bridge Company, this is a $6.5 billion oil and gas equipment and services stock. And it has 18% short interest, which I believe, let me pull up my chart here. Yeah, it's near an all-time high. The days to cover ratio is at an all-time high of 7 days, almost 8 days. And yeah, this one's pretty big in the Delaware and Permian basins down in Texas, the great state of Texas. And let me fix my fibs here. But I'd also like
What's
to
going
point
on
out,
here with the fibs?
yeah, I had fibbed this one out previously and it needs to be adjusted. We've had several false breakouts, but really this has been an incredibly constructive consolidation. Jason, I love to talk about how the best uptrends correct through time and not price. And that's exactly what LandBridge has done. This one, it rallied 300% from its IPO low on that, when was that? June 28th, the beginning of July. It rallied really more like 350%, pretty much in a straight line from there. And it's just gone straight sideways since then, and it looks ready to make a new leg higher. I think 84 and a half is that confirmation of a breakout and a resumption of that primary uptrend. And like we were just talking about with the RBRK, I believe it was, you have that $100 roll coming up here. This one could potentially get above $100 for the first time ever. And you know, if you get across 100 for that first time, you tend to not stop there. You usually get a few more points, maybe 110. I'm looking at 104 as a potential Fibonacci resistance area, but this one looks incredible, and I love the short interest aspect of it as well. What do you think?
Yeah, that's a buy.
Yeah.
That's an easy buy. It's just a buy. You know, I don't know exactly how else you would like me to put that or anybody out there. Not talking about you personally, Sam, but it's just a buy. You see a
Yeah.
beautiful uptrend. You see relative strength. You see a sector that's dead,
Yeah.
and this thing outperforming. That's where you want to be. And I love that we have so many good traders here on CRL most of the time that they just understand, hey, I want to buy a breakout. Like, that's what you do as a trader. You don't go Chevron looks great because it's a big company and you know what they're going to do with the solar revolution. You know, all these things are ridiculous. Like, buy where the strength is, follow the strength. Money's already flowing into it. This thing will be where the outperformance is at. So great
Totally.
pick here.
And I think this
So
is a
glad
good
this
reminder
chart-
that money rotates to where it's treated best.
Yes.
And that works for like the market as a whole. You know, whichever sectors are doing best tend to continue performing well, and it works inside of the individual sectors as well. You know, the worst components in the sector continue to suck, and then the best ones in the sector continue to do well. And this is at the very top of the energy sector right now. So I think this relative strength is going to persist for the foreseeable future.
Yes. I love this chart. So glad this was brought up. This is a great chart.
Yeah.
You might see trades on it from us at some point. I mean, this is a good one.
Totally. I think I've already outlined some trades for it with All Star Charts.
Yeah, Sam's already been
All Star
talking
Charts
about it.
premium members got the first heads up to this one. Jason,
I was getting
let's
to it.
finish
Don't
with
worry.
one
I
more.
always remember Sam's got all these picks. So I always remember Sam's already got it. So
Hey, I'm good at what I do. What can I say? No, Jason, let's finish with one more and get out of here. And of course, if we didn't have time to get to your ticker today and you want us to get to it next episode, Do not hesitate to email us at questions@stockmarketmedia.com. And we always get to those mailbag tickers first during the show. So what do we have, Jason?
So last one, let's figure it out. So we had a
Make
bunch
it a good
of,
one. I don't want a bad one. We've had a bunch
right.
of bangers this episode.
Well, here, whatever you guys think in the chat, figure out what you guys want to see, and then write those tickers right now, and we'll get to it. Because I'm going through
Cool
a
if we
list
could
of
do
them.
like a quiz, get everybody to answer it real
Which one
fast.
was a buy? Which one was a sell?
Yeah, that would be cool. We need to upgrade our technology here, Gene. You're out there.
OKLO came up.
Yeah, all right. I can rap about the AI utility trade if you want me to. This one's a beast. So yeah, I think Jason, let's back up here. Let's start with NRG. So this is NRG Energy. This is one of the largest AI utility stocks, and my machine's being kind of slow pulling it up, but here we go. This one is about $32 billion in market cap, and it had earnings last week. I wrote about it in the Beat Report, and if any of you are curious what the Beat Report is, you can go check it out on stockmarketmedia.com. It's a free daily newsletter. It's awesome. It covers earnings reactions that are just like this. So on last Monday, this one crushed their earnings and had a beautiful gap and go to new all-time highs. And look at how it's followed through each and every one of those days. It's had one little down day, but other than that, the buyers have just been in full force with this one. We can also look at GE Vernova, which is the largest AI utility. This one is $121 billion, recently spun off of the GE Electric conglomerate. And like we were talking about with that land bridge chart, this one has, since it went public back in early 2024, it's pretty much just gone up the whole time. So it's rallied about almost 300%. And here it is right at that all-time high from January of this year. So about 450 is the line in the sand there on the GE Vernova. If it can get above there, I think you're looking at a new leg higher in the AI utility leader. And then if we get a little bit freaky with it, a little bit junky, we can look at the Oklo. So this is a $5.5 billion AI utility. And forgive my VWAP mess here.
I like the VWAP mess, actually. That was showing like where that breakout was.
Yeah, it was a good one. No doubt about that. And so, yeah, this one's one of the smaller ones, a little bit freakier, and it doesn't have any revenues whatsoever. But last week, several days after, it was the day after actually, that NRG earnings reaction I just showed you all, that breakaway gap to new all-time highs. This one also had its best earnings reaction of all time, and I think it's starting to climb out of this rounding bottom, and it's right at this key Fibonacci extension level, which comes in around 39. I love how much this chart has respected my Fibonacci extension levels. That's where it peaked at in early February this year. It kissed it to the very penny and had a pretty nasty corrective wave, but this one is behaving very, very well. Let me fib out this range, see if it's helpful. Nah. Let's call it 39. I think you want Oklo on strength above 39, the target of 60, and I don't think it's going to stop at 60. I think this one's ultimately heading towards 93.5. This one's an absolute beast. Jason, what do you think about this whole AI utility trade?
I love
Pretty
it.
impressive, huh?
I love it. I've been talking about the utility stocks a lot lately, and you know they're a lot of them are doing well. This sector of utility stocks is doing even better and outperforming the XLU. It's a great place to be. I always see things that people go, oh, there's no revenues. Like that's how a
Yeah.
lot of gold miners look, like that are actually the ones that outperform like crazy. There's usually if you see something with zero revenue and the price of it is moving higher, there's something going on there. Somebody's interested in it and somebody wants to buy it, and they probably know the reason they are doing so. So
Totally. That's the same story with the quantum computing trade as well.
yes.
Like these stocks have been absolute home runs this cycle, and none of them have any revenue whatsoever. And they have market caps of like $10 billion. This one's $5.5 billion. So
And this goes to say a lot about why we trade the way we do. Why do we look at price action? It's because none of that stuff really matters. Even though everybody's going to argue about it, say this or that about it, like at the end of the day, if the price is moving up, you're making money. If the price is moving down, you're losing money. It doesn't matter. They could be the best fundamental company in the world, but if the price is going down in the stock, you're still going to lose money. So look at the charts. Charts tell you all you need to know.
I couldn't agree more, Jason. I think that's a great place to leave it for the day. I appreciate everyone being here. Shout out Alexander, Mr. Zerby, Jonathan. I see you all in the chat. Cheryl's in the chat today. Big shout out. I appreciate you all being here. And again, if we didn't get to your ticker today, do not hesitate to email us at questions@stockmarketmedia.com. And we will be back here again next Monday, same time, same place. Be here for it and bring your best tickers. This was an awesome episode of Chart Request Live. Adios.